Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning, ma'am and friends. So, how are you today? I hope you get a good day. So, for today, we from Group 4 in the course Auditing 2. We want to present about the audit of the fixed asset, Prepaid expense, Accrued Liabilities, Revenue&Exp, and account payable material. So, before we explain about that, I want to introduce my member group. It consists of me, Sabrina Tikasari, and then Ayu Lestari, and the last Dinda Dwi Ananta. So, before we explanation about that, I want to introduce the list of contents material will be explained by us. The first one, types of other accounts in the acquisition and payment cycle. The second, audit of property, plant, and equipment. Next, audit of prepaid expense. And the fourth, audit of accrued liabilities. And the last, audit of income and expense accounts. Okay, as we know that the transaction in the acquisition and the payment cycle for all asset accounts, supplies, property, plant, equipment, and prepaid expense accounts. The payment made for services also affect many expense accounts. So, for the discussion for the first material about the audit for property, plant, and equipment will be explained by Dinda. To Dinda, time is yours.
So as an auditor, we have to have the understanding regarding the characteristics of property, plant, and equipment itself. So there are three main characteristics of the property, plant, and equipment. The first one is to live is more than a year, and then they are used for business operational, and they are not expired for resale. Okay, in auditing the property, plant, and equipment, the first things that we need to assess is the equipment-related accounts such as equipment, accumulated depreciation, gain or loss in disposal assets, and depreciation expense. Mostly, auditors verify equipment different from current assets for several reasons. First is there are fewer current period acquisition of equipment, especially in large equipment used in manufacture. And then the second, amount of any given acquisition is often material, and equipment is likely to be kept and maintained in a country record for several years. Okay, this is the overview or the picture of equipment and its related account. As you know, at the first phase of getting or obtain the equipment, we do the acquisition that will increase the balance of the equipment. And then, as the time passed and as we use the equipment, it will incur the depreciation expense and accumulated depreciation expense that will decrease the value of the equipment itself. And sometimes the owner of the business will dispose or sell their equipment at a time, so we will get gain or loss on disposal. Then, in auditing the equipment and its related account, as an auditing book, it's good for us to separate the test into several steps. The first one is perform substantive tests and analytical procedures. Second, verify current year acquisition, verify current year disposal, verify ending balance in the assets account, verify depreciation expenses, and verify ending balance in accumulated depreciation. Okay, first is substantive test analytical procedure. Substantive test analytical procedure are commonly used to assess the material misstatement for the balance of depreciation and its accumulated depreciation. So, for the activity of substantive test analytical procedure and its possible misstatement, you guys can see on the table 19.3. For example, is compare depreciation expense divided by gross equipment cost with previous year, and its possible misstatement is misstatement in depreciation expense and accumulated depreciation. and so on. Next is verify current year acquisition. So what the auditor do in this steps? First, auditor use 7 of 8 balance-related audit as a frame of reference for test details of balances. These are existences, completeness, accuracy, classification, and all these are tied in and rights and obligations. And the more explanation you guys can see on the table 19.4. The starting point for the verification of current year acquisition is normally a schedule obtained from the client of all acquisition recorded in general ledger of property, plant, and equipment accounts during the year. And the most common audit test to verify the addition of property, plant, and equipment is to examine vendors' invoices. In testing the acquisition, auditor must understand accounting standard to make certain the client follows the related requirement. Auditor should also verify recorded transaction for correct classification among various equipment of account, and also examine whether the client has a right to record equipment as an asset or not. Okay, the next one is verify current year disposal. The following procedures are often used for verifying disposal are: first is review whether newly acquired asset replacing existing assets. Second, analyze gains and losses on the disposal of assets and miscellaneous income for receipts from the disposal assets. Third, plan modifications and changes in product line and changes in the major costly computer-related equipment, property access or interest coverage for indication of deletions of equipment, and make inquiries of management and production personnel about the possibility of disposal. Then, verifying ending balance. Then verifying ending balance of asset account. In verifying ending balance of assets account, two of auditors' objectives when auditing the ending balance are all recorded equipment physically accessed on the balance sheet day, and all equipment owned is recorded. So when designing audit tasks to meet this objective, auditor first consider the nature of the internal controls over the equipment. Then typically the first audit step concerns the detail tie-in objective equipment as listed in the master file agrees with the general ledger. After assessing control risks for the existing objective, the auditor decides whether it is necessary to verify the existence of individual items of equipment included in the master file. And the major consideration in verifying disclosure related to fixed assets is the possibility of legal encumbrances arising from the use of fixed assets as collateral for the loan. Next, about the verified depreciation expense. The most important balance-related audit objective for depreciation is accuracy. Auditor focus on determining whether client followed a consistent depreciation policy from period to period and whether the client's calculations are correct. And there are several factors that influence the depreciation expense. Is first, useful life of current period acquisition, estimated salvage value, the policy of depreciating assets in the year of acquisition and disposition, and the method of depreciation. The useful method of auditing depreciation is substantive analytical procedure formed by multiplying undepreciated fixed asset by the depreciation rate for the year. When a substantive analytical procedure cannot be effectively performed, more detailed tests are usually needed by recomputing depreciation expense for selected asset to determining whether the client is following a proper and consistent depreciation. After verifying the depreciation expense, next we need to verify the accumulated depreciation expense. Two objectives are usually emphasized in the auditing of ending balance in accumulated depreciation are: first, accumulated depreciation as stated in the property master file agrees with the general ledger. This objective can be satisfied by thus putting the accumulated depreciation in the property master file and tracing the total to the general ledger. And the second objective, accumulated depreciation in master file, is accurate. Okay, that's all.
Okay, that's all material about the audit of PPA. The next material about the audit of prepaid expense will be explained by Ayu. To Ayu, time is yours.
Thank you, Tika. So let's move to the next topic about audit of prepaid expense. Prepaid expense is a asset that vary in life from several months to several years. In prepaid expense, there's include like prepaid rent, organization costs, prepaid taxes, patents, prepaid insurance, trademarks, deferred charge, copyrights, and goodwill. And in some cases, these accounts are highly material, but in typical audit, the company does not have many of the accounts listed or they are immaterial. Like substantive analytical procedures are often sufficient for prepaid expense, deferred charge, and intangible. So this is the picture about prepaid insurance related accounts. In accounts used for prepaid insurance and the relationship between prepaid insurance and the acquisition and payment cycle through the debit to the prepaid insurance accounts. Because the source of the debit in the asset accounts is the acquisition journal. The payment of insurance premium have already been partially tested by means of the test of control and substantive test and of acquisition and cash disbursement transaction. The next about internal control of prepaid expense. There are three internal control as we can see. The first one is control over the acquisition and recording of insurance. In internal control, this is the part of the acquisition and payment cycle. Consistent with the procedure discussed in that cycle, proper authorization for new insurance policies and payment of insurance premium are important control. Second one is control over the insurance register. In internal control, we can record of insurance policies in force and the expiration date of its policy. Auditor also use insurance register to identify policies in force related to prepaid insurance accounts. And the last one is the control over the charge of insurance expense. In the internal control, a company often have a standard monthly journal entry to reclassify prepaid insurance as insurance expense. The next, this is the audit test. There are 5 audit tests in prepaid expense. The first one is insurance policies in the prepaid insurance schedule exist and the existing policies are listed, or we call existence and completeness test. In the test, we can do the test by the way check the sample insurance invoice and policies that apply for comparison with schedule. And the second one is the client has right to all insurance policies in the prepaid insurance schedule, or we call rights. This is in the test. The party who will receive the benefit if insurance claim is filed has the rights. Actually, the recipient name in the policy is the client, but when there are mortgages or other lines, the insurance claim may be payable to creditor. Next, the test is the prepaid amounts on the schedule are accrued and the total is correctly ended and agrees with the general ledger. Or we call this is the accuracy and detail tie-in test. In the test, the amount of premium for a particular policy and its term can be verified at the same time by checking the premium invoice or confirmation from insurance agent. After that, the client will be calculation on insurance that have not expired can be tested by recalculation. Next test, this is the insurance expense related to prepaid insurance is correctly classified. This is the classification test. In the test, the correct classification of debit to different insurance expense accounts should be reviewed as a test of the income statement. And the last test, this is the insurance transaction are recorded in the correct period or cut-off test. In the test, actually, cut-off for acquisition of insurance is normally not a significant problem because of the small number of policies and the immateriality of the amount. Next topic about audit of accrued liabilities. Many accrued liabilities represent future obligation for unpaid services resulting from the passage of time but are not payable at the balance sheet date. And in the accrued liabilities, there are similar liabilities include like accrued payroll taxes, accrued officer bonus, accrued commission, accrued professional fees, accrued rent, and accrued interest. Next, this is the picture accrued property taxes related accounts. In the accounts, this is the account property tax is used as a sample accounts audit of accrued liabilities, and this is the have relationship between accrued property taxes and with the acquisition and the payment cycle through the debit to the liability accounts, because the source of the debit is the cash disbursement journal, and the payment of property taxes should have already been partially tested by the test of the acquisition and payment cycle transaction. And next, as with insurance expense before, In the accrued liabilities, the balance is the property tax burden is the residual amount resulting from the initial and final balance in accrued property taxes and the payment of property taxes. Therefore, the emphasis in the test should be on the end of property tax liabilities and payment. And also, auditor used two primary tests for the inclusion of all accrual. The test is completeness and accuracy test. And also auditor verify the accrual at the same time as the audit of current year property tax payments. And after auditor are satisfied that all taxable property has been included in the client prepared schedule, they will be evaluate the reasonable of property taxes on each property used by the client to estimate the accrual. That's all from me. I give back to the moderator.
Okay, thank you to Ayu. Okay, that's all about the explanation material audit of the prepaid expense and accrued liabilities. The next material about the audit for income expense account will be explained by me. Okay, to complete our discussion of the key accounts of the acquisition and the payment cycle, an overview is provided of procedure auditor typically used to determine whether the income and expense accounts in the financial statement and are presented in the accordance with the accounting standard. So the auditor needs to be aware that most users of the financial statement rely more heavily on the income statement than on the balance sheet for the making decision. So there are two concepts in the audit of income and expense accounts are essential when considering the purpose of the income statement. The first one, the matching of the periodic income and expense is necessary for a correct determination of operation result. And next, the consistent application of accounting principle for different periods is necessary for comparability. Both of these concepts must be applied to recording of individual transaction and to combine accounts in the general ledger statement. We move to the approach auditing income and expense accounts. The audit of income and expense account is directly related to the balance sheet and is not a separate part of the audit process. A misstatement of an income statement account almost always equally affect a balance sheet accounts and vice versa. Okay, the audit and income and expense account is interview with the other parts of the audit. And the related nature of different part of the audit with the income and expense account testing, the part of the audit directly affecting this account are: the first one is the substantive analytical procedure, next test of control and substantive test of transaction, and the last test of details of account balances. Our emphasis here is on income and expense account directly related to the acquisition and payment cycle. Okay, next I want to explain about the substantive analytical procedure. The table 19.5 show a few substantive analytical procedure and the possible misstatement they might uncover in the audit of the income and expense account, as well as related balance sheet account. So there are substantive analytical procedure and possible misstatement. For the first one is the compare individual expense with previous years And the possible misstatement is the overstatement or understatement of balance sheet and expense account. Okay, the next material about the test of control and substantive test of transaction. The both of the controls and substantive test of transaction have the effect of the simulation, verifying balance sheet and the income statement accounts. For the example, assume and the auditor conclude the internal control are adequate to provide reasonable assurance that reaction in the acquisition journal occurred and are accurately recorded, correctly classified, and recorded in a timely manner. By doing so, the auditor obtained evidence about the correctness of individual balance sheet accounts, such as accounts payable and fixed asset and income statement accounts, such as for the advertising and repairs. Conversely, inadequate and misstatement discovered through this test of control and substantive test of transaction indicate the likelihood of misstatement in the both the income and the balance sheet. So, the most important means of the verifying money of the income statement accounts in each transaction cycle are understanding internal control and performing the related test of control and substantive test of the transaction. Okay, next about the test of details of account balances expense analysis. The auditor must analyze the amounts included in the certain income statement accounts even though the previously mentioned tests have been performed. The expense account analysis involves the auditor examining of the underlying documentation of individual transactions and amounts making up the detail of the total of an expense account. The documents are the same type as the tools used for the examining transaction as part of the test of acquisition transaction, including invoice, receiving report, and purchase order. And the test of control and substantive test of transaction as meant to assess control risk. In the analysis of the expense and other income statement accounts, the auditor verifies transactions in the specific account to determine whether the transactions are appropriate for the client, properly classified, and accurately recorded. And next, about the auditors often analysis, the first one is the repair maintenance expense account to determine whether the erroneously include property, plant, and equipment transaction. And second, rent and lease expense to determine the need to capitalize leases. And the third or the last, legal expense to determine whether there are potential contingent liabilities, disputes, illegal acts, or other legal issues that may affect the financial statement. Okay, the last material about the test of detail of account balances allocation. For the allocation of the accounting data rather than discrete transaction, such expense included depreciation, depletion, and the amortization of the copyright and the catalog cost. For the allocation of the manufacturing overhead between inventory as cost of goods sold is an example of a different type of the allocation that affect expenses. Allocation is important because they determine whether an expenditure is an asset or a current period expense. If the client fails to follow accounting standard or fails to calculate the allocation, the financial statement can be materially misstated. The allocation expenses as depreciation of fixed asset can be materialization of the copyright is the required because the life of the asset is greater than 1 year. So the original cost of the asset is verified at the time acquisition, but the chart of the takes place over several years. Okay, the auditors commonly perform this test as part of the audit the related asset or liability account. This might include the first one, the allocation manufacturing overhead between inventory and cost of goods sold is an example of a different type of allocation that affect expenses. And the last and next, allocation is important because they determine whether an expenditure is an asset or current period expenses. And the last, the allocation expenses such as depreciation of the fixed asset and amortization of the corporate is required because the life of the asset is greater than 1 year. The auditors commonly perform this test as a part of the audit of the related asset or liability accounts. This might include verifying depreciation expense as a part of the audit of the property, plant, and equipment. Next, the testing amortization of the patents as a part of verifying new patents, the disposal of existing ones, and the last, verifying allocation between inventory and cost of goods sold as a part of the audit inventory. Okay, that's all explanation about this material. So thank you for watching. Sorry for our mistake. Assalamualaikum warahmatullahi wabarakatuh.